Assalamualaikum and good day everyone. Today our group will be presenting a case study on scenario 4, which is misleading prospectus. In this presentation, we will examine the legal provisions of the CMSA, the oversight role of the Securities Commission and Bursa Malaysia, and the resulting impact on market reputation. Before we dive into the analysis, allow me to introduce the members of our team.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Izran bin Muhammad Fahmi, and today I will explain the key provision under Capital Markets and Service Act 2007, also known as CMSA, that addresses false or misleading prospectus and financial disclosure. This provision aims to protect investors and maintain confidence in the capital market. So first, Section 246 of Section 1 prohibits the issuance of a prospectus that contains false or misleading statement or omits material facts. Company must ensure that all information disclosed to investor is accurate, complete, and not misleading. Next, Section 248 of Section 1 focuses on investor protection. It allows investor to recover losses suffered as a result of misleading statement in a prospectus. This ensures that investors have legal remedies when they are harmed by false disclosure. Moving on to Section 369 of Section A, Section B, this provision criminalizes the furnishing of false information to a stock exchange. Even if the misconduct does not involve an IPO, prospectus providing inaccurate financial information to the market is still an offence under the CMSA. Section 320 places responsibility on auditors. Auditors are required to report any breaches or irregularities they discovered to the Securities Commission. This strengthens regulatory enforcement and promotes accountability through whistleblowing. A clear example is the Serber Dynamic case, where false revenue figures were submitted to the stock exchange. Although it does not involve any IPO prospectus, it still constitutes misleading market disclosure under CMSA. Under Section 246 and Section 369, Section A, Section B, directors and officers may face criminal liability, including imprisonment or up to 10 years or fine up to 3 million ringgit or both. In conclusion, the CMSA provision work together to prevent misleading disclosure, protect investor, and uphold market integrity. That's all from me. Thank you.
Role of SC and Bursa Malaysia as the gatekeepers. To understand how the scenario 4, the manipulation of financial figures, is handled, we must first look at the gatekeepers. The Securities Commission and Bursa Malaysia are the primary entitled tasks with ensuring market integrity and protecting you, especially as the investor. An initial public offering, or what we call as an IPO, is the bridge that transforms a private company into a public one, allowing it to raise funds for growth or to pay down the debt. However, this privilege actually comes with the heavy burden of reporting and also the public security. Let's look at how the regulator managed the process. The Securities Commission, or what we call as SC, is the ultimate authority for prospectus under the CMSA 2007. Malaysia operates under a disclosure-based regulation framework. This means the SC doesn't guarantee if a stock is a good buy. Instead, it ensures that the company tells the truth so that you can decide for yourself. The SC actually checks this document against the prospectus guidelines to ensure the information is renewable. Most importantly, under Section 245 of the CMSA, if the SC finds out the prospectus is misleading after it's been registered but before the company actually listed, they have the stop order power to halt the entire process immediately. To see this power in action, we can look at the landmark of the Serber Dynamic cases. Much like the manipulate figures in our scenario, this company actually was charged under Section 369 of the CMSA for reporting a false revenue figure for over 6 billion ringgit. Once the auditor raised the red flag, the SC transitioned from a reviewer to an enforcer. They conduct raids and initial criminal proceedings against the top management. This serves as a stern warning. Those who provide false info can face up to 10 years in prison and also multi-million ringgit fines. While the SC focused on the legal document, the Prospectus Bursa Malaysia act as the frontliner regulator. They manage the admission process and the day-to-day behavior of the market. Bursa check if a company is fit or proper to be listed based on their main market or ACE market listing requirement. Once a company is trading, Bursa surveillance teams watch every move. If they see suspicious price drop or trading pattern, what we call as unusual market activity or UMA, they step in immediately to maintain an orderly market. Finally, we look at the continuous disclosure framework. Bursa's job is to ensure that information is released to everyone at the same time to prevent the information responsibility. In a fraud situation like scenario 4, Bursa acts as the primary investigator, feeding critical trading data to the SE under Section 368 of the CMSA. They have the power to suspend the trading, prevent retail investor from losing even more money. This collaboration between the SC and Bursa is what keeps the Malaysian market attractive and credible for both local and international investors. That's all from me, and now we move into the next part.
Now I will tell you about the impact on the Bursa Malaysia. It's a foundation of financial market is a trust. Specifically, trust the information disclosed by companies credible and true. This is the core principle. Financial mispresentation is a direct attack on foundation. It doesn't just hurt one company. It erodes overall investor confidence and compromise the perceived integrity of entire market. Is this not just an ethical breach, but a serious legal one in Malaysia? It violates critical laws, Section 369 of the CMSA and Section 251 of the Companies Act, which mandates a true and fair view. The penalties are served up to 10 million years imprisonment and multi-million ringgit fines. So the final impact, this misconduct a direct assault on core legal and ethical pillar, severely damaging Bursa Malaysia's fundamental reputation as a reliable marketplace. So next is liquidity market of quality. When trust falls, uncertainty rises. Investors become risk averse and pull back, leading directly to market liquidity. A market where trading dries up, this kind of misconduct is specifically in Section 177 of the CMA aims to punish. The damage spreads further for all companies. This environment forces investors to demand a higher risk premium. This raises cost of capital for every firm, making our fundamentally less attractive for investment. As its roots, this cycle signals a failure in governance, a breach of director duty to act in a good faith under Section 213. The final outcome is the risk of Bursa Malaysia becoming a shallow, risk-prone and an inefficient market. Lastly is a competitiveness and international standing. In a global race for capital, reputation is everything. International index providers like FTSE and global investor regularly screen markets for governance and transparency. A single major fraud case can lead to downgrades and negative evaluation. This put at a significant competitive disadvantage against regional rivals like Singapore and Indonesia. Governance flaws and poor liquidity are glaring red flags, while our strong law like Section 317A and Section 540, which can freeze the corporate veil, show we treat this seriously. They are very useful signal to the world that such failures can happen here. Lastly, this impact is that tarnished Bursa Malaysia hard-earned reputation as a transparent, well-governed international exchange, threatening our position in the global financial landscape.
Assalamualaikum and greetings. My name is Muhammad Iskandar and I'll be presenting for suggestion on reforms to strengthen corporate policy disclosure. Firstly, we're going to introduce and better gatekeeping to protect the integrity of Malaysia's capital markets. We need more than just rules. We need rigorous enforcement. It starts with targeted oversight. The Securities Commission and Bursa Malaysia must tighten pre-listing requirements, focusing specifically on complex financial structures and how revenue is reported. To prevent fraud before it starts, we are proposing mandatory forensic audits. This shouldn't just be for high-risk firms, but a standard hurdle for every company seeking an IPO. By identifying red flags early, we create a powerful deterrent against financial manipulation. Enforcement and accountability. We must maximize our enforcement power. When fraudulent disclosures happen, the Securities Commission must use its full legal weight. This means ensuring that anyone who misleads the public faces that strict penalties outlined in Section 246 of the CMSA. Market credibility isn't built on guidelines. It's built on the certainty that there are real consequences for breaking the law. If you provide false information, you will be held accountable. Next, empowering the gatekeepers. We must fix the gatekeeper problem. Auditors and underwriters are the second line of defense, but free centrism, prioritizing a client's payment over public duty, must end. We are calling for a strict enforcement of Section 320, requiring auditors to report irregularities immediately. We also need actionable liability. If an auditor or underwriter fails their due diligence, they should be held financially and legally responsible for the loss. Their duty to the investing public must always come before their interest in the corporate client. Investors' recovery and the big picture. We must modernize investor recovery. While the right to a refund for misleading statements exists under Section 248, the process is currently too slow. We need to streamline restitution to make it fast and simple for the everyday retail investor. By making recovery a reality rather than a legal theory, we align Malaysia with global ESG standards. A market that protects its victims is a market that attracts international capital. Together, these reforms will turn systematic trust into our greatest competitive advantage. Assalamualaikum. Now, I will talk about the values ethical required in IPO disclosures. While the Capital Markets and Services Act provides the legal teeth to punish fraud, laws alone aren't enough to sustain a healthy market. For an IPO to be truly successful, it must build on a foundation of ethics. Today, I'll walk you through the 5 core ethical values that ensure the integrity of IPO disclosures. First and foremost are honesty and truthfulness. Every figure in a prospectus must be accurate and complete. When companies manipulate figures, as we saw in the Sarba Dynamic incident, they don't just break the law, they destroy investor lives and market reputation. Next, closely linked to this is transparency and full disclosure. Ethical responsibility means disclosing all material information, whether it's good news or bad news. Hiding risk or overstating future projections is a direct violation of Section 246 of the CMSA and creates a dangerous information gap that leaves investors vulnerable. Thirdly, we have accountability and responsibility. Directors, accountants, and underwriters are the gatekeepers. They have the moral duty to act in the best interests of potential investors, not just their own bank accounts. Under the CMSA, this ethical duty is backed by personal legal liability for the truthfulness of these documents. Fourth is fairness and equity. In an ethical market, a retail investor on their phone should have the same access to material information as a massive institutional bank. Preventing insider advantages is critical for maintaining market liquidity and ensuring that everyone plays on a level playing field. Finally, we require integrity and professionalism. External advisors like the auditors mentioned in Section 320 must maintain professional skepticism. They cannot let conflicts of interest or high fees blind them to financial irregularities. Their job is to be the second line of defense for the public. In conclusion, these values, which is honesty, transparency, accountability, fairness, and integrity, are the bedrock of our financial system. Without them, Bursa Malaysia cannot maintain the trust of domestic or international investors. Ethics aren't just nice to have, they are a necessary condition for a thriving market.